In this video, we will be learning how to choose and analyze a rental property to see if it will be a great investment and bring us some money. Hi guys, welcome to Pinoy Finance and Real Estate, your source for no-nonsense financial tips and advice. As mentioned, we will be talking about how to properly choose a rental property and learn how to analyze the numbers so that you can have a decent estimate of how much you'll be earning from its cash flow. That is, assuming it will have a positive cash flow. In order to show you how easy it is to look for deals, in this video, we simply made our property search in the Facebook Marketplace. And we found a single-family 2-bedroom home which is located in Consolacion, Cebu. As you can see, the owner is open to bank financing or Pag-ibig housing loan. Now, before we go on any further, I would like to suggest that in searching for the properties online, you should place the words bank financing in your search so that you can immediately see property listings open to such an arrangement. However, even if a property listing does not say that it's open to Pag-ibig or bank financing, there's no harm in asking if they're open to such financing methods. So anyway, back to the point. This property is worth 2.5 million pesos and it is negotiable. Ordinarily, banks or the Pag-ibig have a loan-to-value ratio of 80%, meaning they usually let you borrow only up to 80% of the property's appraised value. Now keep in mind that they will be the ones who will appraise the property and not just anybody. Now assuming that this property has an appraised value of 2.5 million pesos and assuming further that you qualify for the housing loan, you will only need to pay out of pocket the amount of 500,000 pesos, which is 20% of the appraised value. So the bank or the Pag-ibig, as the case may be, will loan you 80% of the appraised value of the property or the amount of 2 million pesos. To make things simple, let's say you just avail of the Pag-ibig housing loan with an interest of 5.75% with a term of 30 years. As you can see, you will be paying a monthly amortization of more or less 11,641 pesos and 76 centavos for 30 years if you buy the property through Pag-ibig. So, is this a good deal? For now, we can't really say because we have no idea how much we will be able to rent it out for. We should now find out the fair market rent for properties similarly situated to the property we are planning to buy. Meaning, properties of the same type, same number of bedrooms, and in the same locality. We can do this by browsing property listings in websites such as .property. As you can see, there's a 2-bedroom house for rent in Consolacion for 35,000 pesos per month. Here's another one for 30,000 pesos per month. And here's another for 25,000. So here's a cheaper one for 12,000 pesos per month. So there. Now we have an idea of how much similar property types are being rented out for in that area. Now we should just find a midpoint from all those rental rates. You must remember that you should not be greedy if you want to last long as a real estate investor. So let's say we will be renting out the property we are planning to buy for 20,000 pesos per month, fully furnished, okay? This figure will also be our estimated gross monthly income. Since we already have an idea of how much we can earn from the property after we buy it and rent it out, we shall now try to compute our total monthly expenses. Usually, expenses that accompany properties like these are real property tax, insurance if you choose to get one, and homeowners association or HOA dues, and expenses for maintenance or repairs. We've seen home insurance which require you to pay a monthly premium of 500 pesos a month. So for the sake of simplicity, let's use that figure, 500 pesos per month. As for taxes, let us say that you will be paying more or less 1,000 pesos a month, okay? For HOA dues, let's estimate that it will be somewhere around 500 pesos per month. And for maintenance or repair expenses, let's say again that it will cost you around 300 pesos every month. However, keep in mind that this amount is simply the suggested amount you should set aside every month in anticipation of repairs, and this does not mean that you will be actually paying such amount monthly. So, as we were saying, your estimated monthly expenses for the property would be around 2,300 pesos. Now that we have a figure representing our expenses, we can already compute for our net operating income or NOI. To compute for the NOI, you just need to subtract our expenses, this 2,300 pesos, from our gross rental income, which is 20,000 pesos. This leaves us with an NOI of 17,700 pesos. To compute for the property's estimated cash flow, we should further subtract our monthly amortization from our NOI. That is, we should subtract 11,641 pesos and 76 centavos from 17,700 pesos. This will give you the amount of 6,052 pesos. This figure represents your cash flow. So now you're probably asking yourself, is that a good cash flow? Without comparing this amount with another metric, that cash flow will simply not make any sense. So you need some context for your cash flow. That is why real estate investors usually compare a property's cash flow, the annual cash flow to be more precise, with the total amount of cash they actually paid in order to acquire such property. This includes transfer fees and closing costs. This ratio is called the cash-on-cash return on investment, or the COC ROI. And this can be computed by dividing a property's annual cash flow with the total amount of cash spent out of pocket in acquiring the property. In this case, the property's annual cash flow would be 6,052 pesos multiplied by 12, which gives us the amount of 72,624 pesos. On the other hand, if you can still remember, we paid 500,000 pesos in cash in acquiring such property. So 72,624 divided by 500,000 equals 0.145. And multiply that by 100, you will have 14.5%. The COC ROI is useful when you want to compare the property you plan to buy with other properties in order to determine which is the better deal. It is also useful and a quick way to compare your rental property investment with other types of investments such as stocks or bonds. Although the monthly cash flow of 6,052 pesos might not seem a lot, always remember that you can reinvest the same to acquire another property which will also produce a positive cash flow, and so on. In this way, your profit from your rental properties will continue growing without you having to provide more cash out of pocket. So to recap, if you want to analyze a rental property, you need to know your gross monthly income, which can be determined by knowing the fair market rent of such property. You also have to have an idea about your monthly expenses. And finally, you should be aware of how much your monthly debt pay down will be. If you know all these things, then you can quickly decide on whether you should buy a particular property or move on to the next deal. So, I hope you guys have learned something today about rental property investing. Thank you for watching. Please feel free to leave your comments down below, and please don't forget to subscribe.